Hi, it's Adam Anderson, owner and founder of WealthGuard Advisors. Welcome to a new year.
Hello, I'm Blake Anderson, certified financial planner. Thanks so much for joining us.
Lots of exciting things have happened since the last time we talked to you. I was doing a deep dive on silver and gold, why we had such a big run in 2025 and volatility we saw right at the end of the year. And then we had this thing that took place in Venezuela that really started to ruffle things. And there's a lot to talk about. Besides those current issues, there's just lots of things that we also want to talk about, like tax changes that are taking place and how you should be adjusting your contributions and being mindful of what your tax bracket is, because it's going to matter in 2026. And those are things we want to talk about, especially if you're doing Roth conversions and things like that. So we'll be talking about that in upcoming episodes. So make sure that you subscribe, follow us, like all that fun stuff. But let's talk about the S&P 500 first, Blake.
Yeah, we are up pretty good today, a little less than 1%. And this is largely due to the carry-on effects of Venezuela, everything going on there, especially with oil. Obviously, politically, this is a very complicated and evolving situation. But as far as markets are concerned, it's actually pretty straightforward. A more open Venezuela is good for the wider economy. More companies able to do business there, able to access these resources that we previously haven't been able to, especially with all the sanctions and restrictions we had on Venezuela because of Maduro. And so good for the economy, and we're going to get into oil specifically.
Yeah, so before the Venezuela thing unfolded this weekend, I was doing a deep dive into gold and silver. We saw an astronomical run in both of them. Actually, the best year since 1979 for gold. So it's been 45 years since we've seen any kind of move like this in gold. And I really want to know, why is this moving? What's going on with this? And why is silver? I think it's 120, 130% gain for the year. I mean, that's a big move. So let me bring up silver. Blake, you want to talk a little bit about why the demands?
So silver and gold, traditionally precious metals, are consumed as part of investment strategies, jewelry, people saving, putting the vaults there somewhere. But especially silver has been transitioning towards an industrial metal with the rise of electric vehicles, battery tech, solar panels are huge consumers of silver as part of their industrial process of building, manufacturing these things. And so we're seeing a rise in industrial demand for silver. And meanwhile, we're seeing a restriction in supply. And so that dynamic has really been driving silver up a lot.
Silver is the best electronical conductor there is, and there's no replacement for it that they've come up with yet. So China on January 1st has restricted the export of silver. So they are going to not let silver out of their country very easily. And this is really putting some ripples through the market. We saw a lot of volatility last week as that was announced and the reality of this happening. So the U.S. exchanges extended the margins so people don't get called out on their silver. And that's caused some other fears in it. So there's been a real fear that took place in the market this last week. And so we saw a lot of volatility in silver. So there also has been a decoupling of real silver's value and what we call paper silver. So we're seeing like the values of those decoupling. And so there's a real concern there on that. So is it time to panic? Is it time to hoard? I don't know that that's something that needs to be done, but there are ways you can play around this to maybe take advantage of this if silver or gold is what you're in, if that's what you're interested in. I wouldn't be too heavy in either of these, but to have some exposure is worthwhile. I did want to talk a little bit about gold, because what made gold go up so much, and I did a lot of research on this. And so countries like Poland are storing large amounts of gold. Brazil, of course, China, a lot of different countries are moving to more gold-based backing their country. So that's one of the reasons why this has gone up so much. Well, why are they doing this? What do they fear? What's the reasoning behind this? And one of the theories out there is that When Russia invaded Ukraine and America put sanctions on Russia, we confiscated a lot of their US currencies that we could get from their banks. And when other countries saw this, they were fearful that, wow, the government could come in and take our dollars. And we don't want that to happen. So we want to have money in a vault. And gold is the anchor at the end of the day, at the bottom of the economic pyramid. Gold, silver, precious metals are the anchors of economies, and they can't be taken, not without force. So that's theory of why these countries are buying up and why this happens. Blake, you want to add to that?
I'd just say, we're looking at gold and silver. Do we think there's still room to run on these? Obviously, they're up huge over the last couple years time frame. And I think there is a bit of that. I'm a little more concerned with gold. Obviously, there are industrial uses of gold, but the supply and demand of gold is a little trickier to figure out. If countries decide suddenly to stop accumulating gold, stockpiling gold, that demand could dry up and gold could see a pretty sharp decline as, there's just not as much demand. Whereas silver's demand is a little more predictable. They're still, both of them are, as precious metals, are very speculative in that respect. But silver is a little more predictable. And with this drawing up supply and really high demand that doesn't seem to be tied in the same way that gold is to stockpiling, I think silver is probably the safer of the two.
Right. I want to talk about SLV. If this is what we look at as the index, do you want to talk about the safety security of, because we just talked about kind of diminishing paper silver.
Well, yeah. So that the difference there is that when you're trying to take actual physical demand of silver, like you would if you were using an industrial process, a lot of the supply chain is slowed up, and the miners aren't producing enough silver to meet that demand. And so there's a slight premium that's being charged to actually get the physical silver. That doesn't mean you need to be concerned if you're trading through a vehicle like SLV, the silver ETF, because that is backed by silver. They have silver in a vault matching every share of the ETF. And so it's not something that you have to be concerned about that, oh, the silver isn't there. There is silver there. The difference is that you don't have to pay up a premium above the fair market value to have physical silver in your hands because of the extra utility if you're using it for some sort of industrial process, or you just want to make jewelry or something like that.
Yeah. So a way to play this, if you're concerned about silver, is to have a silver miners index. And that's one way you could hedge that, because silver miners are obviously going to benefit from this. So you could buy the silver index, the silver miners exchange traded fund. So you can have miners that are actually mining it as a way to kind of hedge against paper silver issues. You actually own the company. There's different risks. There's minor, that they're involved in this, but that's one way you could actually do this inside of your brokerage account or inside your IRA or things like that if you're concerned about that. So we did all this work on silver and gold. We've talked about it a few times this last year because it's such a big news story. And then we had this thing in Venezuela that takes place this weekend. What does that mean for the marketplace? Well, Venezuela is sitting on a proven 300 billion barrels of oil reserve. That is basically the most untouched reserve in the world. And the likelihood that that's going to get out into the open market again is pretty high. So that's really changing some things. So who benefits from this? What is the best way to play this in that sense? And when Hugo Chavez centralized the government and took over the oil industries, and they kicked out the American oil industries that had basically set it up there, because back in the 20s, when they first discovered oil, they didn't know how to do anything. They didn't have the engineers. They didn't have the know-how. And it's U.S. companies that really was very prosperous and successful with bringing this oil to the markets. So when he took over the oil industry, Chevron negotiated with Hugo Chavez, and they kept a footprint there, and they kind of kept a little bit of a thing going there. So Chevron still has a foothold. They have people on the ground. They have the materials there. They are the most direct beneficiaries of this. Let's take a look at their chart. CVX is the symbol. So we are seeing a major bump on this. So we're up 5.5 to almost 6% on the day on Chevron. So they are the most obvious benefactors of what happened in Venezuela. Now, the other big American oil company, and there are only American companies that were down there, was ExxonMobil. Now, they got booted out. They have been in court for the last 20 years fighting to get their claim back and to recover. They've tried to negotiate and settle. They have not settled. They still have claim on Venezuela. So their patience has paid off. So ExxonMobil is another one. Now, it has not gone up as much because they have to still prove their claim. They still have to get their materials back in there. They still have to set it up. They still have to wait for the volatility of this change in regime to come down before they could do anything. So other benefactors would be things like Schlumberger or SLB. And this is a supplier to the oil and gas industry and a refiner on the Gulf Coast. And that's where because Venezuelan oil is not like other oil. It's heavy oil. It's stuff that you use for kerosene and diesel, and it needs to be refined just to move it. It needs an elixir involved in it to get to move through pipelines. It's so thick and heavy. So, and that's been one of the problems I've had. So we'll look at this. We looked at this an hour ago, Blake, and it's already up another 2%, I think, from that point. I think it's just under 10. So this is moving today. So there's a couple other benefactors in this. Any other things that you'd like to comment on that?
Yeah, if you look at the top performers in the S&P 500 today, it's all these refiners and oil miners that are involved in this whole process. In addition to SLB, we have Halliburton, we have Valero, we have Phillips 66. So all these companies that are able to take advantage somewhere along the pipeline from pulling it up out of the ground in Venezuela to reaching consumers, mostly in America, but also other parts of the world. We're seeing huge gains today. I would say this is obviously it's a pretty big move today on the news. And so there might be a little bit of speculation and volatility as things settle over the upcoming week or two. So it might not be the best to buy in now after this big jump, but certainly watch it. I don't think that this is like overblown in this jump in the market. But watch for volatility, watch for a pullback. And I think in the long run, this is a good opportunity for all these companies.
And the reality is that Venezuelan oil hitting the market, they say the time frame is probably 3 years. They said it's probably going to take 6 months just for the political volatility to just settle out, another couple of years just to get the facilities in the ground and the mechanisms in place to be able to produce oil. And so they're looking at like a 3-year timeline before we even start seeing Venezuela oil really on the marketplace, because there is the concern that also we have all this new oil on the marketplace and there's too much supply, so price goes down. And we saw that in the first Trump administration term. Oil prices went down significantly because production was ramped up so much. So they don't expect that that's going to happen, and that we could still see oil prices stay in a similar rate where they are, and it's not going to be collapsing the oil market because all of a sudden there's this newfound supply that's meeting the marketplace. So Blake talked about gold, and we talked about countries that are storing gold, and if they decided to, hey, peace broke out, things are looking better, we don't need to be building up these storehouses, or we have enough, and that stops, that could cause gold to stabilize, even go down. But what if a new source of gold came on the marketplace that was unexpected? And this is one of the things that people aren't talking about with the Venezuela situation. One is they have like $30 billion in gold reserves in Caracas and in London. And so if America was to seize that and bring it back onto the market, that could be a flood of gold on the market. Two is not only do they have oil reserves in Venezuela, they also have precious metals and rare earth metals in Venezuela to the tune of about $2 trillion, from what I understand. So they have a lot of mining potential, and what that means to solve some of our rare earth problems that we're seeing in America. And this might be more the reason we're saying it's about the oil. It may be about the rare earths as the reason why this is all going on. So that is another thing that we're looking at is the miners and how these are. We just talked about the SIL index for silver, the GDX, the gold for silver. If you want just a broad exposure to that, or specifics companies like Freeport McMoran or Newmont Mining, which has big exposures in Latin America. This has made a nice move today, not a huge compared to some of the things we just looked at, but 2.25, 2.33 move on Newmont Mining. So this is another way that benefactors of this Venezuela event that took place. So anything you want to add to that, Blake?
Yeah, there's lots of opportunities going around. We didn't talk about some of the other carry-ons, military,
That's
online commerce in Latin America. Lots of things are moving on this. I can't get into it all.
there's
We'll
some
keep an eye on it.
financials are all booming today.
Thanks so much for listening. We'll keep an eye on this and get back to you next week with more. Just a reminder here, WealthGuard Advisors, we are a registered investment advisory firm, registered directly with the Securities Exchange Commission. Part of that means we are a fiduciary to our clients. I mean, we are legally obligated to act in their best interest. We specialize in personalized asset management and custom financial planning designed around your unique goals. So if that's something that interests you, you'd like to learn more, or just have a chat with us about what's going on in the markets and with us, we'd love to have a free consultation with you and see if we could be of service to you. Thanks so much for listening. We'll see you next week.
Thank you, and have a happy new year.